This is Carl Dahm, and welcome to the Real P&L channel. Welcome to lesson number 6 of my 8-part series, Stocks versus Options. Just a quick reminder from a part of lesson number 1. If I had most of my net worth tied up in a blue chip stock portfolio, I would not sleep well at night because that portfolio is too risky. I have been studying passive income for over 30 years, and a modern options portfolio is the most conservative passive income vehicle I have found. A modern options portfolio not only reduces risk, but also provides higher returns when compared to the market. A modern options portfolio is made up of options positions that follow the 12 principles outlined in my new book called A Portfolio for All Markets. Now let's get into the differences between stocks and options. There are 8 key differences. 2 of those differences actually favor stocks, and 6 of those differences favor the modern options portfolio. Next, I will go over advantage number 4 for options. Advantage number 4 is what I call the edge of possibility. Let's say you go to Las Vegas and you want to play a slot machine. You might be looking to put in $1 to make $1,000. Statistically, we all know that slot machines take in more than $1,000 before it pays out $1,000. Gamblers pay for the possibility of that big payday. We know that the reality is that when putting money into a slot machine, more than likely, you're going to lose money. Just like slot machines, when traders buy options, they're looking for that big windfall. When a market crashes, options buyers on the right side of the market can get that big windfall like a winning slot machine. Traders are willing to pay for that possibility of that big market move. But the reality is a normal type of market move. Now, options are typically 20% overpriced because of that possibility of the big move. I say, be the house and take advantage of those overpriced options. Sell options because 83% of the time they are overpriced. Just to recap, the modern options portfolio versus the stock portfolio. Number 1, we talked about liquidity, where stocks have the advantage. Number 2, we talked about trade execution, where actually you can make the stocks and the options equal when it comes to trade execution. Then we talked about how an options portfolio is actually more diversified than a well thought out stock portfolio. So give options the nod on diversification. Then I went over time and how options premium can be sold, and therefore an options portfolio can make money over time. And I just went over that edge of possibility that people are willing to pay more for the potential for the big windfall, and because of that, options are overpriced, and that is an edge when you sell premium. So you give the check mark to the options portfolio again in terms of the edge of possibility. If you feel like you've learned anything from this lesson, please subscribe, hit the like button, and the notification bell. This will promote the video on YouTube and provide opportunity for others to see it. If you're interested in watching a modern options portfolio in real time with the daily P&L posted, subscribe to my YouTube channel, Real P&L. Stay tuned to Real P&L lesson number 7 of my 8-part series, Stocks versus Options. In lesson number 7, I will go over what drawdowns in your portfolio really mean and how to mitigate them.